A very good morning to you. It's nice to have you this morning, and I would like to welcome you to this press conference of the Bundesbank's annual accounts for 2016. Some publications refer to the public sector budget as revealing the state's bone structure, since it summarizes all government activities in terms of their financial ramifications. Seeing that monetary policy is our most important line of business with regard to its financial scope, one could also see our balance sheet as an X-ray of monetary policy. Balance sheet developments are shaped by the economic environment, but are of course influenced in particular by the decisions taken by the Governing Council of the ECB in setting the general direction of monetary policy. What is reflected above all in our balance sheet this year are the decisions to purchase bonds on a large scale and to charge a negative rate of interest on banks' deposits with the euro system. As the Governing Council of the ECB took a decision at the beginning of 2016 to expand its non-standard monetary policy measures, I'm thinking here specifically of the increase in monthly purchases under the APP from 60 to 80 billion euros, the balance sheet grew even more quickly during the past year than it did in 2015, by 37% after 31% in 15. The decision taken in December last year to extend the duration of the program up to the end of 2017, with the purchase volume then reduced again to 60 billion from April 2017, and the buying of securities with yields lower than the deposit facility rate will also have an impact on our balance sheet, something which we are already having to take into account. But before I explain in detail the determinants of our balance sheet and profit and loss account together with Mr. Thiele, I would like to talk about monetary policy in the light of the economic setting and about the international economic system. Ladies and gentlemen, the economic setting differs in one essential aspect from the one we discussed at the last press conference on the annual accounts. In 2015, it was chiefly doubts about the cohesion of the euro area that kept members of the general public, policymakers and financial markets in thrall. In 2016, on the other hand, attention was focused in particular on events outside the single currency area. Right at the start of the year, developments in a number of emerging market economies, especially in China, were a cause of disquiet. During the year, there followed first the UK referendum vote on Brexit and later the US presidential election, neither of which necessarily produced the outcome that many were expecting. Finally, in December, the failure of the referendum on electoral reform brought about a change of government in Italy. All of these events led to the emergence of many of the risks that economists had hitherto seen as grounds for a possible slowdown in the economic recovery. And all of these decisions are contributing to a situation of quite pronounced uncertainty at present with regard to key underlying economic conditions. Even so, the financial markets and the real economy have coped pretty well with these surprises. That is all the more surprising given that uncertainty is generally regarded as the enemy of long-term investment. Monetary policy, which is still very accommodative in many regions of the world, may also have played a part in this quite robust performance of global economy. Especially with regard to the Brexit vote, the fact that even greater turbulence did not occur in the markets was probably due just as much to the prudent conduct of banks and supervisors. But events also show that the upturn in the euro area has stabilized and stands increasingly on solid ground. You will perhaps remember that the projections in March last year were assuming growth of 1.4% for 2016. Despite the vote on Brexit and the surprising outcome of the US election, the figure in the end was as high as 1.7%. This means that the economy grew more quickly than production capacity. Enterprises' capacity utilization is on the rise. This is also benefiting the labor market in many euro area countries. In 2016, the unemployment rate for the euro area as a whole declined by almost 1 percentage point to 9.6%. That means it is now just a little less than 1 percentage point above its average in the pre-crisis years. Latest economic indicators also point to a continuation of the economic recovery. Retail sales and registrations of new cars showed a marked rise in the final quarter of 2016, for example, and the underlying trend of industrial output is clearly pointing upwards. Furthermore, the EU economic sentiment indicator is currently at its highest level for almost 6 years. The current Eurosystem projection from December assumed that the euro area economy will grow by 1.7% this year and by 1.6% in each of the next 2 years. Although the forecast is currently undergoing its scheduled revision by the ECB staff, I do not expect the previous picture to change very much. However, from my vantage point, the cyclical downside risk has recently tended to diminish. Risk assessment, therefore, has improved. The German economy, too, with capacity utilization perceptibly higher than that of the euro area, remains in good shape. Employment once again hit a new all-time high last year. Thanks above all to healthy domestic demand, gross domestic product was up by 1.8% after adjustment for calendar effects. The economy looks set to remain on an upward trajectory this year and the next, with domestic demand again providing the primary impetus, which is another indication of the robustness of the economic upward trend. The Bundesbank's economists expect calendar-adjusted growth to come to 1.8% in 2017 and to dip slightly in the years after that. However, this positive economic outlook should not blind us to the fact that the longer-run outlook for growth in Germany is subpar. What I'm thinking of here, for example, is that in the coming years the number of persons going into retirement will surpass the number of young people entering the job market. In isolation, this will cause weaker growth, of course. That, too, is why the OECD is projecting that until 2060, Germany will grow more slowly than any other major industrial country. The robust upswing and rising capacity utilization will also drive up price pressures. According to the December projection, the euro area will see inflation rise to an average of 1.3% this year, followed by 1.5% next year and 1.7% the year after. To repeat, that was the December projection. Since then, inflation has risen even more strongly than expected, recently hitting 1.8%. And for full year 2017, the inflation forecast will probably be lifted perceptibly. In Germany, where the effect relative to the December forecast is likely to amount to 0.5 percentage point, some have therefore already spoken of the return of inflation. This increase in prices, however, is attributable mainly to higher oil prices. Since the end of November, oil has become significantly more expensive. At the beginning of the past year, its price had been exceptionally low. This results in a particularly sharp increase in a 12-month comparison. Assuming that oil prices do not rise any further, we should therefore be back to lower inflation rates by the end of this year, if not beforehand. Domestic price pressures, which look through energy price fluctuations and other volatile components of the consumer price index, are currently still comparatively low. As a case in point, core inflation at last report was around the 1% mark. The fact that even at the beginning of the year the inflation rate was already above the forecast, and is likely to remain so for some time to come, clearly shows in my view that we are far removed from the threat of deflation, that is, a dangerous downward spiral of sinking wages and prices that many had cited as grounds for asset purchases. By the way, I'm not the only one who sees it this way. Financial market participants seem to have a similar take on it. The probability derived from inflation options that the inflation rate will be negative in the next 5 years was, at last report, at its lowest point since the summer of 2011. According to Eurosystem forecasts, domestic price pressures will slowly increase, for as the euro area economy continues its recovery, factory capacity utilization will mount and wage growth will accelerate. This will also show up in the core inflation rate, which, according to the December projection, will reach 1.7% in 2019. In this state of affairs, an accommodative monetary policy certainly continues to be appropriate. However, it is fair to ask, as Yves Mersch did 2 weeks ago, when we can take our foot off the monetary policy pedal, and whether or not the Governing Council of the ECB shouldn't shape its forward communications in a more symmetrical manner, such as by not indicating only that monetary policy could, if necessary, be made even more accommodative. Especially since the ultra-accommodative monetary policy is being implemented in key measure through the large-scale purchases of government bonds, which, as you know, I'm very critical of. The line between monetary and fiscal policy is being increasingly blurred, and government funding costs are increasingly depending directly on monetary policy decisions. This is all the more problematical as in the current low interest rate setting, some finance ministers might see their budgets as being more sustainable than they would be in a normal interest rate setting. Another sign of this is that despite debt levels already being high to begin with, some euro area countries recently took advantage of the easing of pressure on government coffers resulting from the favorable financing terms to even accelerate their spending. However, higher interest rates will then expose the burden of high government debt, and the markets too could be more skeptical of the sustainability of government budgets. I would not be at all surprised if, under circumstances like these, monetary policymakers were to come under mounting pressure to keep the monetary policy stance accommodative for some time to come, out of consideration for government funding costs or to avoid risks to financial stability. The so-called Greenspan put illustrates the moral hazard that can come of such an asymmetrical approach. In extremis, monetary policy can even be held hostage by fiscal policy or the markets. In addition, a central bank should not be stretched beyond the breaking point in order to accomplish additional objectives. Examples include the expectation that monetary policymakers pay attention to the redistributive effects of their measures. This is something we discussed critically, as you know, and at great length in the September 2016 issue of our monthly report, or that it ensure more growth in the long run. Monetary policy can't do that. It can quick-start the economy or break it somewhat if necessary in order to ensure price stability. However, only politicians and governments can lead the economy back to a path of sustained higher growth by setting the proper gears in motion in labor market, economic, social and tax policy. Let me give an idea of just what could be achieved by effecting the appropriate reforms. The International Monetary Fund conducted a study to determine which OECD countries have the most growth-friendly tax regimes, labor markets and social insurance systems. IMF economists then calculated what would happen if euro area member states closed half of the gap to the leaders. The result is annual euro area growth in subsequent years would be just under 1 percentage point higher. And since, after all, the long-term interest rate across the cycle is largely composed of trend growth and inflation expectations, this would also contribute in key measure to pushing interest rates back up. With that in mind, it is all the more disheartening that other studies published by the IMF, but also the OECD, conclude that enthusiasm for reform in the euro area has fallen off significantly. Ladies and gentlemen, a number of the conditions needed for dynamic growth can only be created at the international level, however. One such condition are competitive markets, which are enshrined in agreements and treaties that safeguard the free movement of goods, capital and services, and in the European Union, of labor as well. And on that score, the outlook certainly grew dimmer last year. The UK government has now announced that it is aiming to leave not just the European Union, but the single market as well. As things stand, there is no visibility whatsoever as to whether, and if so, when, the bilateral trade agreement the UK government is looking to conclude with the EU will come about. But even then, a likely outcome is that the United Kingdom will end up having looser trade ties with the EU than Norway, which is, lest we forget, a member of the European Economic Area, or Switzerland, which has concluded bilateral treaties with the EU. And the new administration in the United States is going so far as to make protectionist noises. Elsewhere in the world, too many people are mainly seeing the disadvantages which globalization and also technological progress unquestionably entail for some. The advantages of free trade are drifting even further out of focus. Perhaps that is partly because they are less immediately apparent and harder to pinpoint than the drawbacks. But in my view, there is one thing we must not forget. Open markets and a competitive economic system are qualities that underpin our prosperity. In terms of national economies, international trade is most certainly not a zero-sum game in which one country wins at the expense of another. It is safe to say that's not to say that protectionism and insularity are a great deal of help here, especially since technical progress has much the same impact on lower-skilled workers in closed markets as well. The right course of action is to enable citizens to participate in the rewards of globalization. Better schools and universities and lifelong learning can equip people to capitalize on the benefits which an ever-changing environment can offer. And flexible labor and product markets are another catalyst that can facilitate structural change without producing stubborn unemployment, because new jobs are created more quickly than the old ones are lost. The labour market reforms implemented in the middle of the last decade offer a vivid illustration of this relationship, I feel. One major risk of sliding into poverty in Germany, being out of work, was reduced by these reforms. I, for one, firmly believe that open markets combined with economic structures that are more conducive to growth generate stronger productivity, higher employment and rising incomes. And it also allows social hardship to be cushioned by a targeted tax and transfer system. If this model succeeds in making Ludwig Erhard's promise of prosperity for all a reality, it will simultaneously boost confidence in an open and pluralist social order. Inclusive, sustainable growth is also a major topic in the G20 process. Together with the federal government, the Bundesbank will reiterate its backing for open markets and fair trade at the forthcoming G20 meetings. In times like these, when uncertainty is rife, it is safe to say that constructive cooperation between the most important stakeholders in the G20 context is even more significant than it is in any case. Financial market regulation is another topic that demonstrates just how important it is to cooperate internationally on major cross-border issues. The G20 countries responded to the crisis in a swift, comprehensive and coordinated fashion, eliminating key disincentives in the financial system and reducing to a minimum the risk of regulatory arbitrage or a regulatory race to the bottom. The regulatory agenda has kept us very busy indeed in recent years, but almost all the items have now been ticked off. The Bundesbank puts a great deal of effort into this process as a member of the Basel Committee, the primary global standard set for the prudential regulation of banks. And as far as banking regulation is concerned, 2016 was all about wrapping up Basel III, and especially the question of how far credit institutions should be permitted to use their own internal models to determine the capital adequacy requirements for credit risk. Supervisors are looking to reduce the risk that institutions using such models might understate their exposures and thus their capital adequacy requirements, but without questioning the principle of the risk-based approach as such. Much of the work needed to address this topic was wrapped up in 2016. The main outstanding issue is the calibration of what is known as the output floor. The Bundesbank has been involved in efforts to hammer out a compromise up until recently. But as long as the new US negotiators have not been appointed and the negotiating stance remains unclear, there is no point in conducting any further talks. And yet we all have an interest in returning to the negotiating table soon. After all, the regulatory uncertainty caused by a delay in finalizing Basel III is undoubtedly a burden for banks. I firmly believe that the coordinated international revision of banking regulations in recent years have made the financial system a more stable place. That is why a regulatory race to the bottom would be a dangerous thing. The debate surrounding this topic often points to the seemingly positive impact that deregulation can have on growth. The untold damage that inadequately regulated banks and financial markets can do to growth when they precipitate a financial crisis is something we witnessed at close hand, closer than we might have liked in recent years, if we didn't know it already. Ladies and gentlemen, as far as free trade and banking regulation are concerned, it is still unclear at the moment what exactly the future holds in store for international cooperation. The status quo is under the spotlight in other policy areas too. The topic of international security springs to mind. And Europe in particular faces the twin challenge of not only dealing with Brexit, but also handling the sense of disenchantment with the EU in many member states. This is the background against which some voices are now calling for the euro area countries to close ranks. A strong and united Europe is a goal worth striving for. But I don't buy proposals like the ones floated recently that essentially boil down to closing ranks primarily through an increase in mutual liability. Even without stepping up mutual liability, there are plenty of other topics where the governments of Europe can show that Europe functions and benefits the public at large. Just take the new challenges facing Europe, such as internal and external security, or the question of shaping the digital markets of the future. These challenges can best be overcome in Europe by working together. Ladies and gentlemen, in closing, I would now like to come to our annual accounts, and thus also to the Bundesbank's profit last year. The profit and loss account for the 2016 financial year closed with a profit of around 1 billion euros. This was 2.2 billion less than in 2015. In addition, part of the profit for the year is subject to a restriction on distribution, meaning that only the remaining distributable profit of 399 million euros will be transferred to the Federal Ministry of Finance today. That is the smallest transfer since 2004, when a distributable profit of 248 million euros was transferred. The fact that we were unable to distribute the entire annual profit this year is due to the Bundesbank, like many enterprises, by the way, preparing its balance sheets in accordance with the German Commercial Code. Last year, the Commercial Code provisions on the discounting of post-employment benefit obligations were amended. They must now be discounted at the average market rate from the preceding 10 financial years. Previously, it was the average of the preceding 7 financial years. Post-employment benefit obligations are thus discounted at a higher average interest rate. That has resulted in a book profit, but one that cannot be distributed, as we will, of course, have to pay out these post-employment benefits later nonetheless. We have therefore transferred these gains to a reserve. As I've already mentioned, monetary policy leaves its mark on a central bank's balance sheet. For example, the rise in banks' excess liquidity due to the ongoing bond purchases and the negative interest on deposits with us have led to year-on-year growth of 1 billion euros in net interest income. Interestingly, interest is now often earned on the liability side of the balance sheet, while the asset side, where we are mostly buying low-yielding federal bonds under the asset purchase program, is now generating almost no interest. Yet these interest earnings are not sustainable, at least not if interest rates start to rise again. Quite the opposite, in fact. Given the comparatively long time to maturity of instruments on the asset side, it will yield almost no earnings in the longer term too. Meanwhile, a rise in key interest rates could rapidly result in interest expenses for deposits on the liability side. All in all, this maturity mismatch could then lead to losses. As well as exchange rate risk, credit risk arising from refinancing operations and default risks generated by central bank asset purchases, which are already factored into our risk provisions, we now also face interest rate risk. At last year's press conference presenting the balance sheet, I already indicated that we would need to address this issue. Given the current interest rate exposure of around 300 billion euros, a rise of 1 percentage point in the key interest rates would lead to an annual financial burden of around 3 billion euro. This exposure, of course, will rise further in 2017. This is a new situation for us. Back when monetary policy only steered short-term interest rates on the money market, the Bundesbank's balance sheet was, in fact, free from interest rate risk. The vast majority of interest-bearing assets had short maturities. The lion's share were repo transactions with banks and were balanced out by the non-interest-bearing banknotes in circulation. Where it existed at all, the volume of excess liquidity, and thus essentially banks' deposits with us, was very small. Our monetary policy operations were therefore sure to contribute to our profits. Primarily because of this interest rate risk we now face, we have decided to increase our risk provisions by 1.75 billion euros. Mr. Thiele will give you more details on this in a moment. Before he does, however, I must stress that the success of monetary policy decisions must not be measured in terms of the central bank's profit, but against the objective of price stability alone. Having provided this overview and the key data from our annual accounts, I would like to bring my introductory statement to a close. Mr. Thiele will now provide you with more detail on the annual accounts, and then you will have an opportunity to ask your questions. Thank you very much for now.
President Weidmann, ladies and gentlemen, I'd now like to present the Bundesbank's 2016 year-end accounts in greater detail. You will find all the financials in the annual report, which is available here, which also includes notes and explanations on the balance sheet and the profit and loss account from page 66 onwards. That's probably the German version, 64 in the English version. And as usual, we'll be happy to take your questions after my presentation, so I should confine myself to a small number of special items in our annual report. Let's start by taking a look at the Bundesbank's 2016 balance sheet. As a result of our monetary policy activities, the bank's total assets have risen considerably, as they did last year. In fact, total assets have now well and truly passed the 1,000 billion mark, following an increase of around 400 billion euros. Back in 2006, the Bundesbank's total assets stood at 373.5 billion euros, meaning that they have more than tripled since then. The increase in total assets was mainly due to the asset purchase programs that are part of our monetary policy. On balance, our euro-denominated securities holdings have risen by 185.4 billion to 357.5 billion euros. The purchase of German government bonds alone, which began in March 2015 as part of the PSBP program, accounted for an increase of 165.4 billion euros in 2016. The other purchase programs led to an increase of another 25.5 billion euros. The sovereign bond holdings resulting from the SMP program that was discontinued in 2012 have declined by 5.5 billion to 22.2 billion euros due to maturities. Another important reason why total assets have grown is the inflow of liquidity from other European countries. This has led to an increase in the bank's Target 2 claim on the ECB, which rose by 170.1 billion to 754.3 billion euros. The year-end balance was thus higher than the last all-time high, which was 655.7 billion euros at the end of 2012. The liquidity created by the purchase programs and the inflow from abroad is shown on the liabilities side of the balance sheet, especially under liabilities related to monetary policy operations, which have essentially doubled following an increase of 22.6 billion to 411.3 billion euros. Furthermore, there has been an increase in euro-denominated deposits held by resident and non-resident depositors shown under liabilities items 4 and 5, above all due to increases in holdings for the German government, the European Stability Mechanism ESM, and foreign central banks. Specifically, the increase was 123.8 billion to 222.8 billion euros. The volume of banknotes issued by the Bundesbank has also risen by 39.5 billion to 592.2 billion euros. This represents an increase of 7%. Before addressing the profit and loss account in greater detail, I'd like to say a few words about the longer-term development of interest income. As you can see, both the level and the composition of interest income have changed considerably over the past few years. In 2007, the main sources of interest income were refinancing operations, at the time 9.5 billion euros, and interest on Target 2 balances at 1.3 billion euros. At the time, the year-end interest rate for main refinancing operations was 4%. In 2008, interest income even rose to 16.9 billion euros. In the years after that, income from refinancing operations declined due to falling interest rates on the one hand and a decrease in volumes on the other. In 2016, interest income from refinancing operations dropped down to zero. Interest on the Target 2 claim were as low as 63 million euros. Up until the 15th of 2016, they were generated when we had a rate of 0.5, and since then they've gone down to 0. So at the moment there is no more interest income. The most important items in the 2016 P&L are the interest income generated by the S&P portfolio at 1.366 million euros and the negative interest on bank deposits of 1,047 million euros.
Nun ein weiterer Blick auf die Folie 7, die Gewinn- und Verlustrechnung.
Chart 7, the P&L.
Die wichtigste Komponente der G&V
In the P&L, the most important item is net interest income, which has risen significantly from 2.3 to 3.3 billion euros. Net interest income, the item I just explained in some detail on the previous chart, rose by 0.4 billion to 3.7 billion euros. Mainly because the negative interest charged on deposits grew by 1.1 billion to 1.4 billion euros. This in turn was due firstly to a strong increase in the volume of deposits held by banks and the volume of euro-denominated deposits held by other resident and non-resident depositors, and secondly to an increase in the negative interest rate, which almost doubled on an annual average. Income growth was held back by the lower interest on the Target 2 balance, which in turn was due to the reduction in the main refinancing rate to 0 in March 2016, and by the maturity-based decrease in securities held for monetary policy purposes from the terminated purchase programs. The old program, as it were. It is true that the purchases made under the new purchase programs, CBPP3, CSPP and PSPP, have led to an increase in total assets and deposits. However, given the low interest rates they carry, even negative for the PSPP, they don't contribute anything to interest income.
The
0.6 billion euro decline in interest expense is mainly due to changes in the interests on pension provisions, as explained by Mr. Weidmann before. For further details regarding interest income and expenses, I would refer you to the annual report, specifically the table on page 77. The net result of financial operations is, as compared by Mr. Weidmann, minus 1,073 million compared with a surplus of 1,654 million the year before, due to the increase in risk provisions. Income from participating interest was up slightly from 282 million to 339 million euros, whereas the net result arising from the allocation of monetary income declined from 133 million to 25 million euros. At 1.1 billion euros, staff costs were 0.4 billion euros higher than the year earlier. The main reason is that the level of funds allocated to staff provisions rose by 0.4 billion euros year on year. Other administrative expenses, including banknote printing and depreciation, were more or less flat year on year. Taken together, the remaining items fell by 92 million euros due to one-off effects in the previous year. The 2016 profit and loss account shows a profit of 1 billion euros, compared with 3.2 billion euros a year earlier, owing to a 0.6 billion euro allocation to the reserves due to the HGB restriction on distribution explained by President Weidmann earlier. The remaining distributable profit is 0.4 billion euros, as mentioned before, and as the President said, this restriction affects all German companies. Allow me to make the following remarks on interest rate risk. Traditionally, the Bundesbank's balance sheet was not encumbered by interest rate risk. The lion's share of interest-bearing interest assets was short-term by nature, and the banknotes in circulation don't carry any interest. Currently, however, we are more and more worried about interest rate risks, especially since the ECB Governing Council decided in 2016 to expand the APP program. As you can see on this chart, longer-term assets grew significantly in 2016, driven by securities purchase as part of the APP and by targeted longer-term refinancing operations, TLTRO2 for short. In 2017, this open interest position, and please look on the left-hand side, you can see the accounts 2015, and on the right-hand side, the figures for 2016, 74 to 316 million, an increase by a factor of 4, and it's set to increase. On the balance sheet, an ever larger share of these longer-term assets is not juxtaposed with banknotes in circulation, but with short-term interest-bearing deposits. This maturity mismatch, longer-term assets on the one hand and short-term liabilities on the other, leads to an open interest position of currently around 300 billion euros as at the balance sheet date, and hence interest rate risk. In 2017, this open interest position is set to grow since the purchase programs will run until the end of December. Should key interest rates rise as of 2018, this open interest position will weigh heavily on the Bundesbank's profit and loss account. That's because the short-term liabilities that form the balance sheet counterpart of the APPs and the TLTRO2 refinancing operations, i.e. the interest-bearing deposits of banks and other depositors that currently yield high interest income due to the negative rates, will cause significant interest expenses once key rates go up again. So not just will they not generate any income, they will actually generate expenses. By contrast, the above-mentioned balance sheet counterparts, i.e. APP holdings and the TLTRO2 operations, are unlikely to generate substantial interest income. Moving on to chart number 9, which shows the revaluation accounts. Interestingly, they were up by 13.9 billion to 119.7 billion euros. The lion's share of this increase is due to the revaluation reserve for gold, which rose by 13.5 billion euros. There are two effects behind this increase. Towards the end of the year, the gold price in US dollar terms was up 9% year-on-year, whereas in euro terms the gold price was up just under 13% year-on-year due to currency effects. The revaluation reserves for foreign currencies have also gone up by a total of 0.5 billion euros year-on-year due to the weaker euro. From a long-term perspective, the revaluation reserve for gold continues to show a significant increase compared with the level reported at the beginning of monetary union, 21 billion euros as at the 1st of January 1999. This reserve is currently 5.5 times as high as it was in early 1999, and this in spite of the drop in prices seen in 2013 and 2015. With that, thank you very much for your attention, and I'd like to hand back to Mr. Best.
Thank you very much. Let's come to our Q&A period. I would suggest Mrs. Schetter from Stuttgarter Zeitung. Two questions, if I may. On the one hand, German economists increasingly have demanded negative rates to be abolished, even if the purchase program is still going. For the balance sheet of the Bundesbank, this would not be so good. Mr. Weidmann, would you still be in favor? And secondly, given the rising target balances, would it not be appropriate to have a risk provision for that as well? I had tried to explain before that monetary policy is not pursued with a view to balance sheet effects. The question as to how the exit will be shaped must be viewed independently of financial impact. As you know, underlying the expansionary monetary policy and the comprehensively accommodative orientation, it is from full allocation to bond buying and key interest rates, etc. Bond purchasing in the monetary union are viewed as particularly critical, and therefore you can imagine what my preferences are. The second question about target. Our basic scenario is the continued existence of monetary union. In this basic scenario, the target balances aren't loss-bearing. You know that target balances carry a risk only if you assume that a country leaves monetary union, and target balances are always in respect of the ECB, that there are target liabilities in respect of the ECB then. Then a process will start that will depend also on the willingness and ability of the respective country to settle those liabilities. In our balance sheet, we still assume the monetary union is there to stay. It would be somewhat strange, would it not, if we had different assumptions in our plans that would give rise to totally different questions. So in this respect, we don't plan to have any provisions for the target balances shown. That isn't the relevant quantity. The target receivables of Bundesbank, as I just said, it's a question of the target liabilities of a leaving country, and the losses that may come about as a result possibly would be allocated to the remaining members in terms of their relevant share. This would concern both countries with liabilities and those with assets in respect of the ECB. The figure given by Mr. Thiele isn't the right reference or reference quantity.
Good morning.
Well, die Geldpolitik scheint ja so ein bisschen ihr Geschäftsmodell abzuschaffen. Und wenn man sich diese Aufstellung, die Herr Thiele eben gezeigt hat, nochmal genau anguckt, woher der Zinsüberschuss kommt, dann sind da ja eigentlich die einzigen Größen, die noch ein bisschen länger Bestand haben, die Negativzinsen, das alte Anleihenprogramm läuft so langsam
asset purchase program is gradually running out, so that's gone down. You're not getting anything for target. Don't you think that you might run up losses? Is that possible? That monetary policy will force you to show a negative result? Second question, the amount of this pension provisioning effect, what exactly is it? How much did you put by for a rainy day? And third question on Basel III, what is your opinion? Have you seen the end of the line yet? Or will the talks be shelved? I know you want to continue, but as things stand at the moment, that seems unlikely, and our experience is that even if an agreement, this will only come into effect after all the parliaments agree, including the US Congress, and they didn't always do that in the past. So don't you think it's possible that we'll be in the boat, whereas others won't be in the boat, and that there are different regulatory regimes, even if there is an agreement? Thank you. Well, that was a large number of questions, actually. Again, our business model is not to generate profit for the Minister of Finance. Our business model is to provide a public good, and this public good is called price stability. This is the benchmark for us and for you. But you're right, absolutely. There are interest developments that are not unlikely, and there might be losses. That's why we are making provisions. This is in fact the core of the discussion that we are having, and which led to an increase in our risk provisions. There are changes in the balance sheet, and therefore we have to assume that depending on the development of interest rates, going forward our profits might fall down, we might even incur losses. And we are putting money by carefully for this situation. So we are looking ahead. This is the core of our risk provisions. And this is not just done by the Bundesbank. Other central banks in the Euro system have also increased their risk provisions compared to total assets. We are not at the extreme end of the range. I think we're somewhere in the midfield. And interest rate risks are also something that central banks are familiar with. So this is not a special feature for Bundesbank. But of course, this affects mainly those central banks in the Euro system which have positions on their asset sides, comprehensive positions, an item that are very low yielding. But that doesn't apply to everyone in the Euro system. That much on question number one. Basel III, next. Well, my fundamental assumption is always that everyone who is at the table will also implement what's been decided at the table. I mean, that must be the very basis of the meeting and of the negotiations. Otherwise, having this meeting is pointless. I mean, if they agree and they don't implement it tomorrow, what's the point? That must be the prerequisite, this kind of approach. There must be willingness to implement the agreements, but I don't know whether the negotiating partners will be willing to implement an agreement, because currently there are no negotiations going on. We're waiting for the Americans, and they have yet to define their own position. But the conclusion is, even if you were right, even if one of the partners did not implement the agreement, we couldn't. That wouldn't mean that we wouldn't do anything or reduce regulation, because regulation makes sense. That's the first thing I'd like to emphasize. And secondly, we'd like to have fair competition and a level playing field at the international level. As far as provisions are concerned, I'd like to hand over to Mr. Thiele. Yeah, just briefly, those pension provisions, increased trends in salaries and pensions, they rose to 5.1 billion euros by 400. That's, I think, the figure that you were asking for.
Leider kein Tool. Where will we be at the end of 2017 when the ECB program is phased out? Don't you see any risks for the Bundesbank, given the rising target claims? And if a country leaves, although it isn't your basic scenario, do you think that this country or the central bank would repay target debt? And finally, if, as is usual in the United States, what would you think of balancing out such balances at the end of the year, as it is done in the United States? Well, let me say first of all that target liabilities in case of a country leaving will be settled. That is the basic assumption that Mario Draghi stated once again in his letter to two European parliamentarians. The ECB has a claim there that it must not give up. So this must be the basic assumption. Just how this is done in practice, to what extent a government is willing and able to pay for such liabilities, is a different matter. However, in order to take a somewhat more nuanced look at this, what's important is that it isn't just the claims we have vis-à-vis the ECB that are the central risk, but it's the liabilities of a country that leaves the monetary union. That's the first finding. You will see in our balance sheet that target assets and liabilities aren't the only balancing item we're recognizing. We've got a very similar item as a result of cash circulation. There, the Bundesbank has liabilities vis-à-vis the euro system, because more money is withdrawn from us than is in line with the economic strength. These liabilities are quite sizable. And these items, in the case you're discussing, would have to be netted off anyway. And this will give you a more nuanced picture. Our basic scenario, as I said, must be the continued existence of monetary union. We discussed this with the auditors at length, who have given an unqualified opinion about our balance sheet. Then another point was, what can we learn from the United States? I'm afraid I can't answer all of your questions because there were quite a few of them. To what extent is collateralization, like in the US, is conceivable for the euro system as well? When taking a somewhat closer look, you will realize quite quickly that this model cannot be applied to the euro area. In normal times, European monetary policy is implemented by means of securities purchases. One asset, debentures or bonds of the federal government. In normal times, apart from APP, our monetary policy is made sure by means of revolving repos. That is a major difference to start off with. Now, this is changing a little because of the APP, but the major difference that still continues to be there is that it isn't one asset, bonds of central government, but different assets of very different credit quality, which in designing the PSVP, quite deliberately, we have kept on the balance sheet of the respective national central bank. Now, we have a claim on the ECB. I would call the ECB a sound and reliable debtor. Whether the situation improves when swapping such a claim against securities of a euro area state, that is a matter for discussion, of course. Would you be calmer? And that would be the consequence. If instead of this claim, Italian, Spanish or Portuguese sovereign bonds were held by us, that would be the swap. I'd rather have a claim on the ECB. And when it comes to collateralization, the additional benefit resulting from this is certainly a matter of discussion. Above all, as this is associated with certain signaling effects, and the value in case of an exit that you're assuming is one that you can ask questions about. The question of the value and the enforceability of such collateral, in my view, is very critical.
Here comes the next question.
Ja, ich wüsste eingangs gerne, wie hat denn eigentlich Herr Schäuble reagiert auf das
What was Mr.
Zahlenwerk
Schäuble's
der
reaction
Bundesbank in diesem Jahr?
to
Und
the
dann würde
Bundesbank's
mich
figures?
perspektivisch
The
noch
Minister of
interessieren,
Finance.
das
And in the
Zinsänderungsrisiko.
long term, you talked about interest rate
Was
risk.
heißt das eigentlich dann für die Bundesbank
What does this
im
mean
Verlauf? Denn
for
an
Bundesbank
dieser
in the
neuen
long
Situation
term?
ändert sich ja so schnell.
Because this
Für Sie
situation
erstmal
is
nichts.
not
Die
going to
Risikovorsorge
change
ist
in
jetzt
the
auf Rekord.
foreseeable
Müssen wir uns also
future.
auf weiter
Risk
steigende
provisioning has
Risikovorsorge einstellen.
reached
In den
a
nächsten Jahren
record
müssen wir
high.
dann irgendwann an die
Are you
Goldreserven
going
ran, um das noch
to have
abbilden zu
to
können.
touch your
Und,
gold reserves
der
and
EZB-Rat hat ja unlängst entschieden, die Regeln für
set
die
aside even more
Bondskäufe zu lockern. Wie
provisions?
schwierig ist es
The
eigentlich
rules for
mittlerweile für die
bond
Bundesbank,
purchases will be
das Anleihekaufprogramm
eased according
umzusetzen?
to the ECB Governing
Notfalls soll ja
Council. How
ein
difficult
Ankauf
will
von
it be to
Papieren mit
implement the
einer Rendite von
programs?
unter
There will
minus
be
0,4%
a
erlaubt
program
sein.
for
Wie oft tritt denn
purchasing
dieser Notfall bei Ihnen
papers
auf?
of minus 0.4. How often does this emergency occur
Also
at your end?
angesichts der relativ guten Haushaltslage des Bundes
Well, given the
ist die
sound
Reaktion des
finances of the
Finanzministers, würde ich mal
German
sagen,
government,
jetzt nicht
the
nicht
reaction
gerade
of the
besonders
Minister
emotional
of Finance
ausgefallen,
was not
wie
very
Sie sich vorstellen
emotional.
können.
As you can imagine.
Das ist, glaube ich, nicht für ihn wirklich das zentrale Thema im
I don't think
Moment.
that this is the central issue for him at this point
Den
in
Blick
time.
etwas in die Zukunft zu weiten. Sie haben
And you
vollkommen
asked
zu
about
Recht
our longer
darauf
term
hingewiesen, dass
prospects,
das
and you are right in
Zinsänderungsrisiko
saying
angesichts
that
der
the interest rate
Duration
risk,
unseres
given the
Portfolios
duration
auf
of
der
our
Aktivseite
portfolio
ein Thema
on the
sein
asset
wird,
side,
das uns noch eine ganze
will be
Weile
an issue that
begleiten
will
wird.
stay
Und
with
im
us
Gegensatz zu
for quite
einem
some
Kreditrisiko,
time
das
to
sich
come.
oder einem Ausfallrisiko, das sich ja
There is
einmal
other type of interest rate risk or
einmal
default
schlagen
risk
wird,
that
ist das ein
happens just
Risiko, das
once.
uns ja über die Zeit
But this other
auch
risk
immer
is going
wieder
to stay with us
in die
in the course of time, and it will also have an impact
wird, weil
on
diese
our profit
Minderung
and loss
der
account.
Erträge natürlich über mehrere
We
Jahre
will see
sich
lower
ziehen wird.
income over several
sodass,
years.
Sie recht haben
So,
mit
you're
der
right.
Erwartung, dass wir auch auf der nächsten Bilanzpressekonferenz, wenn wir uns dann wiedersehen,
Expecting that when we meet
erneut
again at the next
unsere
press conference,
Wagnisrückstellungen aus Zinsänderungsrisiken aufstocken.
we will have increased
werden
our
müssen,
risk
wie sich
provisioning
allerdings
due
dann
to
das
interest
Gesamtbild
rate risk.
der
However,
Wagnisrückstellungen
I don't know what the
ergibt.
overall
Das ist eine
picture
offene
of risk
Frage,
provisions
weil
is going to be. That's
wir
an
haben ja
open
nicht nur
question.
Zinsänderungsrisiken, das ist
Because
ja eine ganz
there's not just
neue
interest
Risikoart,
rate
sondern
risk, this is a new
wir bilden
type
ja,
of risk,
Risikokursrisiken,
but we
Kreditrisiken
also factor
ab in den Wagnisrückstellungen
FX risks
beispielsweise,
in
die
our
sich
risk
auch verändern
provisions,
können über die
and
Zeit.
those
Und,
risks
der
can
Nettoeffekt
also
wird dann
change
darüber
in the course of time, and
bestimmen,
it remains to
inwieweit
see
wir die
what the
Wagnisrückstellungen
net
auch im
effect
nächsten
is
Jahr,
going to be
aufbauen
on
werden.
next
Aber ich hatte
year's
Ihnen vorher,
risk provisions.
gesagt, dass
But like I said
dieser
earlier,
Aufbau oder diese Rückstellung für Zinsänderungsrisiken maßvoll und
this
vorausschauend
risk
ist.
provisioning
Und
for interest
vorausschauend
rate risk
eigentlich
is
insbesondere,
moderate
dass wir,
and forward-looking.
den
And
Aufbau
when I say this,
der,
what I mean
Zinsrisiken, die wir,
is that
Zinsänderungsrisiken,
we're
die wir
looking
derzeit
at
sehen,
certain
über
interest
2
rate
Jahre auch
risks
strecken
over a
werden
period
zunächst
of
mal
2 years.
und auch das spricht natürlich dafür, dass wir im nächsten Jahr einen weiteren Aufbau sehen
And so, yes, there will be another increase in risk provisions for this next year. Then the implementation
also die Umsetzung
of the
ist
PSPP.
insofern jetzt etwas einfacher geworden, wenn Sie
Well,
so
implementation has
wollen,
become a little easier,
des
if you like,
kaufen
because we can
können
purchase
und
at
das
rates
auch
below
tun
the
und auch am
deposit rate.
kürzeren Ende des
We do that.
Marktes,
Also at the
aktiv
shorter
sind. Also
end
diese
of the
Käufe,
market, we are active there.
finden statt
We make
und
purchases.
führen aber
This
auch
is
dazu,
happening.
dass es in Bezug auf die
And
Implementierung
what this
des
means in
PSPP
terms of
bis
implementation
zum
of the
Ende der
PSPP
Laufzeit
is
keine
that
Engpässe
there
geben
will
wird,
be no
was die
bottlenecks
Bundesanleihen angeht.
as far as government bonds are concerned
Frage dann von
until the
Frau
program
Anlauf.
expires.
Next question by Ms. Rando.
Hier in der Mitte.
Here in the middle. Thank you.
Herr Weidmann, zwei Fragen.
Mr. Weidmann, two questions.
Zu Kommentaren aus Ihrer Rede. Sie haben Kommentare von Herrn Mersch
Comments.
angesprochen, der die Frage
In your
aufgeworfen
speech, you
hat, wann wir
referred
denn
to what Mr.
geldpolitisch
Mersch
vom
said, who
Gas
said, at what time
gehen
will we
sollten.
take
Mich würde
off
natürlich
our
Ihre
foot
Antwort zu der Frage interessieren.
off the pedal?
Und hinterhergeschoben,
And I would like to know what your
erwarten Sie,
answer
dass
is.
der EZB
And
Rat
also
im
let me
März,
ask you, do you expect that
bereits,
the Governing
über
Council
diese Thematik
will
diskutieren wird
take up
und gegebenenfalls
this issue
auch,
in its
eine
discussions as
Entscheidung
early as March
diesbezüglich treffen wird?
and may take a decision
Die
as soon
andere
as
Sache, die
that?
mich interessiert,
The other
betrifft
thing I'm
noch
interested
einmal Ihre
in,
Rückstellung.
once
Herr
again,
Thiele hat
concerns your
gesagt, dass sich zum Ende des
provisions.
vierten
Mr. Thiele said that
Quartals
at the end of
offene
the
Zinspositionen in
fourth
Höhe von
quarter,
etwa 300
open exposures
Milliarden
running to
Euro
around
in der
300 billion
Bilanz befinden.
euros are in the balance
Mich würde
sheet.
interessieren,
I
die
would like
Rückstellung,
to
die
know
Sie jetzt getan haben,
the
auf welchen,
provisions you have
auf
established
welcher
now.
Lücke sozusagen bewegen die sich? Ich weiß, dass
For
Sie da ein
what
bisschen
gap
vorausschauen.
are they
Also mich würde interessieren,
designed? I know you're looking ahead.
mit welcher
So I
Lücke
would
Sie
like to
in
know
welchem
what kind
Zeithorizont
of
rechnen
gap you're
und,
expecting for what time
inwieweit man
horizon,
ausrechnen kann,
and
wie viel
to
an
what extent you
Zinserhöhung
can
da
calculate
sozusagen versichert ist.
the insurance
Ja, also das werden Sie nicht
given
können,
by this for
weil
interest
die
rate
Methodik, die
increases.
hinter den Rückstellungen,
Well, you can't
steht,
do that because the underlying methodology for these provisions is quite complex, but I'll be happy to explain it to you. We assume that the open interest exposure this year, because of the purchases, will expand to around 500 billion. And at the end of next year, through the various interest rate trajectories you can imagine, we will have an interest rate risk on our balance sheet. What we do is that we use a time series process that is modeled, and if you want to know it, the Arima-Gauge model, and from this model, 20,000 random samples are taken for 20,000 different interest rate trajectories are taken. And we'll look at those trajectories which, in relation to our P&L, say, will give us the worst result, and the risk metrics are applied to these results then. That would be a very important point to make clear again. From these and with these provisions, we are not giving a forecast of monetary decisions, or we don't assume that there will be a particular interest rate trajectory, and we don't predict any particular decisions going forward. But based on a random sample, the range of possible developments is pointed out. And the worst percent will be analyzed, and VAR, or expected shortfall, the usual risk metric, will apply to it. This forward-looking element in respect of these interest rate risk provisions, because we are looking not just at this year, if you will, because of forward guidance, that is covered to a point, but we'll take a look from the end of next year to see how interest rates may develop, and this is extended over 2 years. In the simplest possible terms, this is the methodology to calculate interest rate risks, or for that matter, provisions for that. Of course, there isn't one methodology only you can apply, but we do try to have robust results in that different methods and metrics will be analyzed. So much about provisions. Monetary policy now. Maybe I should say a few more words, but I suppose you don't mind. The basic statement is this, that on the one hand, I do concede that given the muted domestic price pressures, expansionary monetary policy is warranted, is justified. But I think that certain non-standard measures, especially bond purchases, sovereign bond purchases, are viewed particularly critically by me. And given an accelerating price increase on the one hand, and also a cost-benefit analysis or a weighing up of risks, which is particularly unfavorable for these instruments in my view, such as an extension of the APP program last time round. I didn't go along with that, which doesn't mean anything but that I would have been willing to accept a lower degree of expansion to monetary policy. Now, when putting myself into the shoes of the ECB Governing Council, and what I'm saying here also informs my own views and considerations. We have an objective. The objective is to have a rate of price increases which is in line with our definition, just below 2%. What the medium term is has never been specified in detail, also because of the delay in effect from monetary policy impetus may be variable, will be time variable, and also the shocks impacting on a national economy will have different effects, and that's why we've kept this open. It's also a question of how quickly you want to get to this target, this definition of price stability. And there is a certain range, I would suggest, which is part and parcel of the definition of the medium term. This objective was to be attained in the medium term, and this was specified by various press conferences, and Mario Draghi, he said a sustainable price increase or self-sustaining price increase. Self-sustaining, from my point of view, means that this price development reflects above all domestic price increasing pressures. And this leads to the question of second round effects in making assessment of this, and also it leads to the question of just how effective do you think the individual monetary policy measures are. It leads you also to the question to what point you assume that the effectiveness of the very loose monetary policy will fall off over time. And there's a discussion over risks there as well. Another point which is important in this context from my point of view is the question. We're not talking about applying the brakes full on, but we are talking about a very expansionary monetary policy. Of course, it will be a little bit less expansionary, but it would still be accommodative. Such a change in the degree of expansion and its impact on price trends and a muting effect will have to do with the question of whether the markets expect a tightening of the markets. To what extent is the market adjusted to this kind of development? And therefore, the forecast even now contains market expectations that the APP program, for example, will not be extended. These are the expectations that you can read from the surveys that some of you do on and off, or when looking at the forward rates for interest rates. You'll see there as well that over a somewhat longer horizon, a certain rise is factored in there, priced in. That's one aspect one needs to bear in mind. And then another point that plays a role is that you don't have just one instrument, but a large variety of instruments determining the degree of expansion of monetary policy at this point in time. Decisions by the Governing Council are designed in such a way that some of these instruments will be phased out if no new decisions are taken, like the TLTROs that Mr. Thiele mentioned. There is a certain phase-out of some of these monetary policy instruments that are part of the decisions taken by the Governing Council anyway. And in conclusion, I always like to mention that monetary policy, because of the increase in inflation rates, of course, has become more expansionary anyway, and automatically, because real interest rates have fallen. And all this means is that an more expansionary monetary policy was priced in, and for bond purchases as well. You need to talk about what will determine the effect of such bond purchases, stocks or flows. And that is the discussion that we may have on the Governing Council of the ECB with different views held. But I've never given any forecasts of such discussions, as there is no reason to do this today. We are giving a forecast of the economy and our risk behavior, but that's it.
Next question from Mr. Morschhäuser. Two things, actually. Number one, interest rate risk.
Ich nehme an, das ist ja keine einsame Entscheidung, diese Modellauswertung von Ihnen, sondern da gibt es ja auch die europastaatlichen Wirtschaftsprüfer, nämlich wie das in der freien Wirtschaft ist. Und da würde mich einfach mal interessieren, da kann man an dem oberen Rand des Machbaren liegen,
and you can be at the upper end of the range or at the lower end of the range. Now, what do you think? Where is Bundesbank in its evaluation of interest rate risk? Because you said you're looking at the next 2 years. Second question has to do with the Brexit. You said it didn't go that bad because the supervisors and the central banks acted wisely. Could you expand on that and give us the most important aspects? What was wise in this context?
Also wo liegt die Bundesbank? Also zunächst mal, vielleicht hilft das ja auch.
Well, let me say this first, just to put things into perspective. That decision was not a political decision by the board. We let those models run, then there is some fine-tuning. But essentially, this is a technical decision taken by our colleagues in risk controlling. It is prepared by them. They do that by using different models and calibrations, and then they come up with a range. And there are some other risks as well. We never publish them, but we look at the aggregate risk and the entire range of risks. And I think I can say that we are somewhere in the middle part of the range, because you could imagine quite different scenarios. There could be a potential sale of bonds that could generate substantial losses. I mean, that is possible in theory. So we are forward-looking, we are moderate, as usual at Bundesbank. We are conservative, as you know. However, if you look beyond interest rate risk, if you also factor in some other elements, and I think that is necessary for a proper evaluation, because interest rate risk are incurred by very few central banks. Other central banks face other risks, for instance, default risks. And you will find that in terms of provisions for general risks, Bundesbank does not adopt an exotic stance in relation to its balance sheet, its total assets. We're somewhere in the midfield. The figures can, of course, not always be compared 100%, because there are different regimes and rules and regulations in different countries. For instance, there might be different commitments from the finance ministries with different effects. But I think what we're doing is appropriate, and this was in fact confirmed by our independent auditors. Next, Brexit. Well, what I meant when I said that the financial markets cushioned this surprise rather well, what I meant is that in the wake of the financial crisis, we saw that the equity positions of banks were increased. There was better, higher quality equity too. So that's a general remark, a general framework. Specifically, in the run-up to Brexit, there was a technical, a specialist discussion within the banking system, but also with regulators about possible risks related to this kind of scenario. So the banks were well prepared. Having said that, from my perspective, we didn't see any great market turbulences out there. The market didn't drop after Brexit. But that does not mean that we're not going to see any economic effects. We might see them sometime in the future. Next question, Mr. Akagawa.
Guten Tag. Sie haben zuerst erwähnt oder hingewiesen von G20.
You mentioned the G20.
Wenn ich richtig verstanden habe, Freihandel und Bankenregelung sollen zwei wichtige
free trade
sein in
and banks. They are two important
was für eine
benchmarks
Diskussion erwarten
in
Sie
Baden-Baden.
dann
What kind of discussion do you expect with the new US Minister of Finance in Baden-Baden? Second question, do you see a turnaround in the monetary policy stance in the most important industrial countries after the decision of the ECB or BOG? The time of extreme QE, the larger the better. Are those times over? This as the silver bullet, or is it too early days to say something or to comment on this? Well, I can see a change in monetary policy in the United States, but not in other currency areas. Monetary policy stances, as a result, are drifting apart, but this is in line with the different economic developments that we're seeing in the United States. This development is quite different from the euro area, for instance, and Japan. Recently, we presented the topics for the German G20 presidency, so I don't want to repeat this at this press conference, but of course sustainable growth is an important element, as is digitization. Some of you attended, in fact, the digitization organized by Bundesbank, and as far as our American colleagues are concerned, well, we're all excited to see what we're going to learn from them or what we're going to be hearing from them, but I'm not going to speculate about what we're going to hear at the G20 summit in Baden-Baden. It's too early. I think our American colleagues have to identify and find their own position first. I'm mainly in touch with the central bank, and there haven't been too many changes there. So let's just wait and see, shall we?
The next question here from Mr. Malnin from Handelsblatt, here in the middle.
Mr. Weidmann,
in its budget, the Ministry of Finance, I think, has provided for 2.5 billion, but the transfer is much lower. I suppose this will fuel a political discussion over ECB policies. How do you assess that? Second question, How do I assess what? The assumption, says Mr. Weidmann, that the provisions that Bundesbank makes today will possibly fuel the political discussion? Yes, the political debate over that, says the gentleman. And the second question, don't banks and other players also make more provisions for interest rate risks, just like the Bundesbank? Do you think you are a model for states as well, for example? And finally, in the latest ECB minutes, there's a reference to a trade-off between a deviation from the capital key and stronger purchases below the deposit rate. What is your approach to this? How do you weigh this up? You mean, do we view ourselves as a model for commercial banks in Germany? Well, I would suggest we don't compare ourselves so much with commercial banks. We have a totally different purpose. So we are not a model, a role model for commercial banks, but in the context of supervision, we would expect that banks deal with the interest rate risks that have built up and will build up in their balance sheets, and will deal with them with a forward-looking approach. You can't compare, in short, a commercial bank with a central bank. Nevertheless, interest rate risks do play a role for commercial banks as well. And we have an eye on this as supervisors. That is my answer to your first question. The second question? In the ECB Council, we have determined a number of parameters in respect of the APP and the PSPP especially, where the purchasing universe is restricted. From my point of view, some of these parameters are more important than some others, because they serve the purpose that what is an important distance from monetary financing of states is kept, and by not setting wrong incentives, by buying bonds from those countries that have particularly high levels of debt, and rewarding them for their deficits of the past. Let me be more specific. What this means is that the issuers and issuance limits are very critical in my mind, such that the euro system doesn't hold a dominating position in the market for sovereign bonds, that we keep a distance from monetary financing. And the capital key in this context is very important, to my mind. And then another question that you asked, it's rather hypothetical. Let me stress once again, the monetary policy cannot be benchmarked against the financial impact on the Bundesbank. What you are describing is in existence anyway, and quite independently of today's financial statements press conference. Now you can speculate over whether this fuels something or not. I think it's quite hypothetical. What should we have done? Not show and recognize any provisions because it gives rise to a discussion. We make our decisions quite independently of such public discussions or possible public discussions. The next question by Mrs. Träg from Politico, the lady there.
Vielen Dank. Herr Weidmann, Sie haben in Ihrer Rede die Arbeitsmarktreform Mitte der 2000er Jahre gelobt. Gehe ich richtig in der Annahme, dass Sie nicht begrüßen würden, wenn man diese Reform jetzt zurückfahren würde oder teilweise zurückfahren würde?
Withdraw those reforms, if only partially? Just one question. Usually people ask 2 or even 3 or 4 questions. Well, you know, at the end of the day, we only look at things from a monetary policy perspective. That's how we evaluate certain political decisions. But in terms of the efficacy of monetary policy, I think it's important for us to have a robust economic upturn and to have a growth trajectory that is not constantly going down. In my opinion, Germany has weathered the crisis quite well, and that's thanks to several factors. On the one hand, there were the reforms that you just mentioned. They were certainly an important contributing factor. On the other hand, what also played a role were wage negotiations, collective bargaining. And another element certainly was that since then, in wage agreements, there have been some opening clauses that made it possible for everyone involved to adapt better to this economic slump. And I think it also makes sense to look back and to put ourselves in the shoes of the people who were there. Germany was seen as the sick man of Europe before the crisis. In terms of unemployment rates, we were at the upper range, and in the meantime, what we see is an employment record, one after the other, in fact. And there are many reasons for this. But undoing the Hartz reforms would not make sense given the challenges that Germany is facing in economic policy. The Euro countries are facing different challenges. I emphasize that time and again. In Germany, the main challenge is the demographic development. We can see this development happening. It is ongoing, and it might be covered by this high level of migration. And this demographic development has an impact on the social security systems, and that needs to be addressed. And you certainly can't do that by undoing previous reforms. That would be detrimental on monetary policy. If we leave those reforms in place, I'm sure that'll be good for Germany. Germany will recover as it did after the crisis and will also help us to get monetary policy back on track. Next question. Mr. Södra from Süddeutsche Zeitung Daily.
Herr Weidmann, ich wollte nochmal die erste Frage meiner Kollegin aufgreifen.
I'd like to come back to the first question asked by my colleague. Which one?
Von der Stuttgarter Zeitung.
My colleague from Stuttgart Zeitung. I'm not sure whether I understood your question correctly, so let me rephrase the question. If I'm right in terms of the exit, the Bundesbank is pursuing the US strategy. So first of all, you terminate QE, and then you think about possible interest hikes. Question to you. Do you think it would be possible for you that during the purchase program you increase the deposit rate, or is that out of the question? Well, the ECB has its own forward guidance, and this also describes the consequence that you just described. Of course, the ECB Governing Council can change and go back on its decision. I mean, you're asking, perhaps I should rephrase this. My point earlier on was that, in my opinion, there could have been a less expansionary monetary policy stance. So I wouldn't say no if this, what you described, would happen, irrespective of a debate on the underlying instruments. At the same time, the ECB Governing Council has to make sure that it is consistent in its decisions and announcements, and it's got its forward guidance in place, and if everyone sticks to that, that means that we have to go through a certain process. Is that answer any clearer? Sorry, the gentleman is not using a microphone. Your interpreter cannot hear the follow-up question. President Weidmann continues, you know, the point is that in the previous decisions, I would always have been prepared to accept a less expansionary stance. If you were to ask, would you mind if we got there? My answer is certainly not no, but in it by itself, from the point of view of the ECB Governing Council, it's important that they are and remain consistent, in line with their announcements, because otherwise people will think that decisions from yesterday are worthless. Next question by Mr. Fairless, Wall Street Journal, in the first row, please.
Thank you very much, Mr. Weidmann. Again, about this consistency you referred to a moment ago. You said monetary policy is appropriate at the moment. I didn't say that. I said one expansionary orientation of expansionary policy is appropriate. Will you go in for QE coming to an end quickly? And a second question, abroad there are some worries that Germany benefits particularly from monetary policy and the low euro exchange rate. Would you agree with that? And do you think that there are too many worries in this country about interest rates that are too low? I think you're right in that the discussion in the Governing Council in the context of the PSPP is different from that we had for SMP or OMP. The previous purchasing programs sought to buy the bonds of those countries that were faced with interest rate increases in the market and saw rising risk premiums in particular. And therefore the thrust of those programs was to reduce the risk premium, not a risk-free interest rate. The PSPP, as opposed to this, is different. Also because of the discussion we had in the ECB Governing Council, we'll only buy bonds from our own respective country. That is to say, as a result of these programs, there is no mutualization of state default risks, but for us this means we'll buy only securities of the federal government and with the interest rates that we discussed before. So the program is designed differently. It is about the risk-free interest rate as a tendency. It's not about mutualization or commutation of state default risks. So it is a less fundamental discussion than the one we had for the other programs. The other question was in respect of... Sorry, the gentleman is speaking without a microphone. Whether there are any worries. Well, you've got this debate with a totally different sign in each country. If you go to Italy, for example, and if you ask who benefits particularly, it will be Germany. If you ask somebody in Germany, I'm sure people will say, it's the Italians. And in my view, that in itself suggests that this debate doesn't take us anywhere. The fundamental insight is that a stable European currency, community currency, benefits everybody in the euro area. And this may change over time, and positions may change over time. Remember, at the beginning of monetary union, Germany was the troubled child. We had high price increasing rates as opposed to Spain. Today it's the other way around. The cyclical development in the different countries may change over time, and to have a discussion about who will benefit from the euro, or for which country monetary policy is appropriate at a given point in time. It's there for the euro area. It can be too expansionary in one area, in one country, and too restrictive in another. But these positions may change over time. But everybody benefits in the euro area from a stable currency. That's the one thing. And then this discussion. Monetary policy must not just be assessed from the angle of a saver. We view monetary policy in terms of our target of achieving price stability. That's our objective. And citizens certainly have different views of monetary policy. There is the saver, and I can understand frustration on the part of savers for sure, but there are people who take out a loan. There are companies that invest and will have a somewhat different take on monetary policy. And we aren't just talking about German savers, but Italians are supposed to save as well. And in Italy as well, the risk-free interest rate is fairly low as well. Interestingly, it is true, the real rate has come down further clearly because of the inflation increase, but particularly short-term bonds in real terms. In the past as well, this showed negative results. And we must make sure this isn't protracted for longer than is absolutely necessary for price stability. The next question is from Mr. Lacour, from Rizicourt, then two more questions, and then we'll gradually draw to a close here. The microphone there, please.
Herr Weidmann, dass die EZB sich jetzt für 9 Monate oder sogar länger entschlossen hat, diese an Staatsanleihekäufe weiterzuführen.
The ECB will continue the purchases of sovereign bonds, perhaps because they do not want to disturb the markets by changing their opinion every 2 months or so. So it seems that
mittragen, also dass die EZB sich so
the drug line is still
über ein Jahr schon ein bisschen so Guidance gibt und nicht alle 3 Monate vielleicht nochmal überlegt, wie vielleicht Ihr Wunsch wäre. Und zweitens eher eine politische Frage.
It seems to be unlikely that this is going to change in the short term. Second question, do you worry about the political success of Ms. Le Pen in France? Any worries about the French elections? The first question, as I said earlier on, I look at price prospects and risks and side effects, and in December I also supported the expansion of the program, and now you're asking me whether that was a good decision and whether we shouldn't review that decision. Well, I think the answer is obvious. Of course, continuity in a political stance is a good thing, obviously. And as far as the possible outcome of the elections in France is concerned, I'm sure you will understand that I'm not going to comment on that. I don't think we're good at making forecasts about elections anyway. We're not, our guess is as good as yours. I'm sure that the next French government will stand by Europe and the euro. Next question by Ms. Jones, Financial Times.
Auf Deutsch diesmal.
Deutsch und Englisch. Ich habe 3 Fragen.
I have 3 questions on the German economy, 2, and 1 on monetary policy.
Also Kanzler Merkel hat gesagt, dass den Menschen in Deutschland
said that Germans have never been better off because the economy is so strong, so robust. What do you think about Chancellor Merkel's opinion? Is she right?
Und wie soll die deutsche Regierung den Budgetüberschuss
And how should the German government use the budget surplus? And my question on monetary policy, and I'd like to ask this in English.
Given the strength of the German economy compared with the rest of the Eurozone, it seems quite likely that Germany is going to have to target a period of inflation of higher than 2% if the ECB is to remain on track to hit its target. So would you accept that that is likely, and if so, how do you intend to deal with that?
Well, I'll take the last question first. That is likely, and this is in line with the different economic developments in the various countries of the Eurozone. It is obvious that in a country that has almost reached the limits of its capacities, a country where the employment market is full, that there's price pressure is higher than in a country with a high unemployment rate. And we've seen that the other way around. In the past, in Germany, inflation rates were below the average, and in other countries they were above the average. This is part of monetary union. Inflation rates reflect economic developments, and monetary policy looks at the inflation rate in the Eurozone as a whole, and that means that there are fluctuations around the average. That's the first thing I'd like to say. Now, I'm not going to comment what others are saying or have said. I will try to answer this question in terms of its actual content. I think it's right that in economic terms, Germany is well off. Unemployment is as low as it hasn't been for many years. There are very few young unemployment people. We're a role model here. We have weathered the crisis faster than others. We have solid finances, and there are very few imbalances in terms of income because we have redistribution, so we're much better off than some other OECD countries. But this positive short-term result should not blind us to the fact that in terms of the longer-term outlook, Germany is facing big economic challenges that need to be addressed, and they're mainly due to the demographic change that we can expect. But they've also got to do with the fact that there's been an inflow of migrants. We have to integrate these people into the labor market. Then there are developments such as digitization, a development that could upturn whole industries, and we have to ensure that energy remains affordable in the long term. Those are the challenges we're facing. It is true. At the moment, the economy is doing well, but we must not rest on our laurels. And this brings me to your second question concerning the budget surplus. Given the demographic burden on the government going forward, we believe that it's good to have a budgetary surplus. Now, you asked, how should this surplus be spent? Let's not forget that Germany has still 60% debt. There's agreement on debt across Europe, and therefore I think it makes sense to have a budgetary surplus.
Mr. Siebelt from Reuters, and afterwards the last question, Mr. Toussaint from AFP. Mr. Siebelt, the last two questions, please. Mr. Weidmann, I would like to know this. ECB also decided to buy below the deposit rate. That means that you accept losses. What about the Bundesbank's balance sheet? Have you made provisions for such losses? Is this part of the interest rate risk? It may be a different item.
insgesamt zu diesen Käufen sagen?
Overall, what can you say about these purchases?
Sie haben recht. Also wenn wir
You're
unterhalb
right.
des Einlagensatzes kaufen,
when
dann
buying below
bedeutet
the
das,
deposit
entscheidend
rate,
ist ja für uns im Wesentlichen die Differenz aus
what's critical to us is the difference between the deposit rate
der Verzinsung
and
der Papiere, die
the
wir kaufen.
yield of
Dann bedeutet das für uns
securities we buy.
einen laufenden Verlust.
For us, this means an ongoing
Das
loss.
führt dazu beispielsweise, dass wir in der Summe
What this means is that, all told, this earning situation that we reported about before cannot be continued on. That's the consequence of it. And there is a certain link with the fact that the many assets we have on our balance sheet, securities, for example, but also TLTROs, all told, give us very low yields compared to what's happening on the liabilities side and can be neglected by comparison, more or less. Interest rate risk, these are current losses or ongoing losses, and the interest rate risk is the influence of these purchases on running P&L, and interest rate risks are provisioning for the future. Mr. Toussaint, the final question, please.
Agence France Presse.
I would like to try another question about France. In the past, you've very often stressed just how important reforms in France were. I would like to know how you assess the current debates in the election campaign about reforms. Do you see a greater awareness of the importance of reforms in France? I don't know whether you had the time to read the candidates' manifestos. Do you have a preference for, say, one of those manifestos? Do you want me to make a recommendation as to who to vote for? No, this certainly would go beyond my powers, and I would always go in for people to focus on their core areas, and in our case that's monetary policy. So don't expect a long answer to your question. I must admit, I don't know the election platforms of French parties or movements, but it seems that someone who is associated with reforms may enjoy a lot of agreement, and that if you go in for reform, you don't have necessarily got to lose elections, or you may not necessarily lose agreement on the part of voters. Thank you very much, says the chairman. With that, we are at the end of the press conference. Have a nice day. Have a nice day, says Mr. Weidmann.